Okay, folks, and welcome to another episode of our weekly breakdown. In the past week, we saw the dollar going heavily upwards, going heavily upwards, and elevating with this particular CB being worked out of. So most likely, we are expecting this will be a draw liquidity. And I told you last week that this particular CB wants to see how they react in it. Since they are trying to work their way out of it, they are going to invalidate the CB and come all the way here. So without going to the daily, we closed here on Friday, and I gave you this particular point on Friday. I want to see how we react within this small fair value gap. If we react within this first fair value gap and we didn't validate it, we might come down here. That was what I was telling you, that we might come down here and maybe go up more. I wasn't really expecting all these long moves, so I was expecting how we react inside here. And we did that. The Monday we entered into it and we came out of that immediately after entering into that fair value gap. So this is the fair value gap I'm talking about. This one. This was invalidated. We just ran into it, pinned into it, and came out of it. So the dollar has been going on a bullish trend, and if it has been going on a bullish trend, then what does that bode well for foreign currencies? That means they are going on a bearish trend. I had to realign my weekly bias because I was caught offside. I was thinking maybe it might just take here, maybe depreciate a bit, retrace a bit, and then go for more. I know this was the target, but I was thinking maybe we might retrace a bit to give the foreign currencies breathing space, but the dollar is having none of that. So they did all of this, and then went straight for it. So immediately I saw this on Monday, I knew this was the next point of action, and then I had to realign my weekly bias to that. And on Wednesday through Thursday, seeing this, me seeing this on the charts on Wednesday through Thursday, I knew the most likely coming inside here again. There's a fair value gap inside here that we might most likely run into. And once you run into this fair value gap, I'm expecting maybe another reaction. And as I've always preached about fair value gaps, the candle, the anchor, that's the mid candle. These are the three candles that makes up that fair value gap. The anchor, this particular one, if they don't take out the low of this anchor, that fair value gap is still valid. So all this running into it, even pinging way past it, way past inside that box, is still valid. You see how the bodies of the candles that enter the fair value gap, how they respected that fair value gap, how they all respected it. So that's also another big confirmation for you. They are all within. And this particular run down didn't ping this, and then they run all the way back up. So that was what happened throughout the week for the dollar. And trading this would have been, the first thing would have been, okay, if you are bullish throughout the week for the dollar, because I had to realign. Monday, I wasn't really looking for trades. I was seeing how they want to realign because I was first bearish on the dollar, thinking maybe we can see a retracement then. But since that didn't happen, immediately I saw this on Monday, I knew, okay, something like this might happen. Retracement maybe coming to this particular red candle, which will serve as a order block coming to this red candle and then sending us for more. So I started looking for bullish structures on Tuesday, Wednesday, Thursday, and Friday. That was all I was looking for. So on Tuesday, this is Monday. On Tuesday, all this particular, this is the 4 hour charts now. On Tuesday, this particular thing you're seeing right there, that's a BC, that's another fair value gap. So since that's the BC, I was expecting an anchoring to the BC. that okay, we should retrace into the BC and then gravitate for more. And my first point of call, my very first low hanging fruit for the Tuesday is actually here. That was my first point of call. Why was that my first point of call? The previous day high. The previous day high, this is it. That's my first point of call that okay, if we retrace inside this BC, then we run to the previous day high and then maybe expand for more. All these particular retracements, if you put your fib on it, you see the multiples for all these runs. So that was like my anchor. That was my anchor. I'm going to the 1 minute chart. Going to the 1 minute chart, I was anticipating here. All this running for this particular move out became my market structure shift. All this sell off, immediately we ran with velocity here. That became my market structure shift. These last two red candles became my order block. These last two red candles all became my order block, and then after it became my order block, all I just had to do was expect a retracement, ping my trade inside the retracement, and then wait for this first, and then see how we go from there. So with that being the premise, going to the 5 minutes, I was expecting this because I actively watched the DXY over any other thing, over any other thing. Actively watched the DXY. So immediately the thing that my eyes became laser focused to this. Look at all the sharp drops, and then working this CB retracement, and then going for more. All of this. So going by that, with that being the case, what will be happening to the euro? If we're expecting longs on the dollar, then definitely the euro was going to be going for, we are going to be going for shorts. We are going to be going for shorts on the euro USD. So for the euro USD on Tuesday, yeah, somewhere around there. For the euro USD on Tuesday, no, not this, sorry. For the euro USD on Tuesday, I saw this going to the daily again. Let me go to the daily so that this is going to be really refined. So this was Monday. This was the first target. This was what I was expecting overall that the week should unfold after I realigned that. Since I was expecting a bullish week for the dollar, definitely it's going to be a bearish week for foreign currencies. My Monday did all of that. My Tuesday, Wednesday became this. All I was targeting. I'm going by the 4-hour frame. The 4-hour frame, we saw an equal low here. Equal low here. We haven't gotten to the terminal, so I believe this CB was still valid. I believe that, and then we retraced into this CB and fell off from there. So on Tuesday, this was all I was waiting for. This became everything I was waiting for. And since the dollar itself hasn't gotten to that point that I was watching out for, so I was still anticipating, okay, we'll still go out down and down and down. And that was what the euro did. They gravitated up for more till the dollar got to that point. So with that being said, going to the 1 hour, immediately they took that out. Let me draw it out very well. Immediately they think that my next idea, my next framing that there is a fair value. Let me clean this up, please. There's a fair value gap here. There's a BC now. We're looking for longs. There's a BC here now. There's a BC, and these last two red candles are actually fair value gap that I'm anchored to, and there's a BC here. And since there's a BC here, and taking your fib, the low to the high here, that this is the midpoint. This is all I'm saying. this is the midpoint. So all of this is the accommodation of entering discounts. Then this fair value gap, this particular fair value gap is still valid. For me, it's still valid because it's until they run all the way here, that's when it's no longer valid. So it's still valid. So all this pinging I was expecting, and then this running straight down before going back up, I was expecting, okay, they should go into discount, sure. So with that being said, what was I looking for in the 5 minutes? On the 5 minutes for Thursday, I was looking at something that will show me want to go up for more. Something that will show me want to go up for more in the sense that maybe a breaking structure or market structure shift. So after this went all the way down, this went all the way inside here. Let me draw the paths from here to here, and then sell-off, retrace, more sell-offs down, and then a reversal. So immediately this reversal was expecting a retracement. So a retracement here happened, and that happened. So immediately this reversal move, and then it started showing us its hand that wants to go up. This retracement was expected, then more moves up. All of this, since this hasn't been taken out, all of this is still within that price range. So seeing this, and then we start seeing how they try to gravitate, and then they break it down again. This is where I took the trade, and all I targeted was here. I knew it was going to go higher, and I am wrong. I'm comfortable taking within the middle of the move, opening my trade and taking it off within the middle of the move. I don't have to take up to the highest or the lowest low. So all I did was from here, these two particular down close candle there, that was my other block that I anchored it on. This was the displacement, the breaking structure, this was the retracement, and then I took the trade in. Just around there, my stop was at the low of the other block, and my target was here. That was it, 1.75 RR. So you'll be like, oh, the RR is small, you should have taken more. Yeah, but I'm confident with this. I'm happy with this. And this is still low risk for me, because this is a low angry fruit for me. So that was the top premise for the trade that I dropped. And then for Friday, I didn't really sit much on my desk. It was later that I ended up back testing everything that happened on Friday. On Friday, I wouldn't actually have loved seeing this, but there's a fair value gap here, like I told you before. And then coming to ping the top of the candle that anchors that city. I wouldn't have loved it, but the same premise still follows. And what's that premise? The premise being that the dollar, this is the dollar here, the dollar was going to enter this fair value gap and then gravitate back up, while the euro was going to enter this city, that fair value gap, and gravitate down. So since that was the premise, Friday would have been a sell-off, a sell day for the euro USD, and that would have been what we would have expected. So with Friday being that way, going into it now, as well would have been things I would have liked to have seen. I would have waited for them actually to come and invalidate this particular fair value gap here. I would have so much loved it, seeing it. Them coming to invalidate this fair value gap, which they did here, and then maybe seeing a trade up. I'll just anchor it on to go for more lows. So going to the 1 hour, that would have been the premise I would have wanted, and then so this would have been what I would have expected, this particular BC, them coming to do it. So immediately this particular candle came out to invalidate that BC. I would have expected maybe a retracement, and then so we have gotten the opportunity. I wouldn't have really loved trading this. So Maybe it's just my gut feeling telling me not to enter a trade on Friday. I wouldn't have really loved entering a trade here. I would have really loved maybe if they retrace and then sell off. But it is what it is. But that's the breakdown for Friday. That's the premise, that's the breakdown. So going to another pair right now. Let's go to the gold. Oh, why did you skip the pounds? Yesterday coming back to that. Gold, I really worked a lot on gold. A lot. I think that just so choky there. So let me clean this. That's done. Going to the gold now. Going to the gold, definitely this comes into play. Let's go to the weekly. I told you that, going to the gold, I told you that we might still see a long for the week. That we might retrace a bit and then see a long for the week. I told you that we aren't yet done with the gold. I didn't just tell you that, we'll start seeing sell-offs. We aren't yet done with gold, man. Since that was the main idea that I still was hell bent on for the gold for the week. So all I did was on the daily, all I was targeting for gold was longs, looking for those bullish operators. So with that being said, targeting longs. Now, where will I now anchor the longs I keep targeting? Where I will anchor it to be the previous days high. That's all I'll be looking for. The previous days high. If the market is going to trend and it's going to go up, it will keep targeting the previous days high. Obviously, that's a low hanging fruit. Since that's a low hanging fruit, on Monday, good. On Monday, I targeted it and they quickly did it. So on Tuesday, I targeted the high on Monday. They did that. Although I was watching for here, if it has retraced, I would have really enjoyed it then. But Tuesday, that was still the premise. Target the high on Monday. Wednesday, target the high on Tuesday. Thursday, target the high on Wednesday. That would have been the plan. But Wednesday did something like this. Cleaned out where they had the low on Tuesday. We'll get into that. So looking at that on the 4 hours. Looking at that on the 4 hour chart. On Monday, the high on Friday was here, and on Monday, market open did that. So there was no trade for me on Monday. They already did that. So Tuesday all I did was, okay, watch out for how they walk inside this CV. How they walk inside this CV on Tuesday. Because they will start working it on Monday and then Tuesday. So inside this particular CV, this particular one, this one gap CV. So we're going to do 1 hour. Going to the 1 hour, really fine tuning it. I will now raise it back here and adjust it. This is where my CV is. So on Tuesday, that was all I worked out for. How did they work this CV? How are they working it? How are they trying this to navigate for this? So since I was long, I ignored every bearish operators. Every bearish operators, every bearish other block, every bearish things, I ignored it. I only look for bullish operators to target the previous day. That was it. So now, starting from the London Open, that's where I started from. Obviously, started from the London. Oh jeez, don't really like dragging. So starting from London, all I watched out for was previous days since that was the target. Previous days I been the target. I saw this happening, and then I saw this retracement. Since I saw this retracement, Good. There are plethora of treatments. Okay. I saw these retracements, so I was thinking, okay, the next one will draw. The next one drawing, I thought, okay, after this draw, you should just draw to somewhere around there, not go run and take out this. Draw to somewhere around there, retrace, and then that retracement is where I will take my trade, and then maybe we'll run this. I first take partials and then take more. But as they have it, they just run all the way out. They ran all the way out. So I didn't take any trading. And then I saw all these blinkers back. Okay, seeing all these blinkers back, we are not yet here. So I'm not like out that, oh, we might start going down. No. And then I saw this again, running all the way. I was like, what's going on? They didn't want to take this. They didn't get up to that and then run all the way back to take out this. After taking out this, I'm still not saying, oh, we want to go down. I'm still looking for my bullish structure. So now, with that being said, I'm looking for my bullish structure. I saw them. Immediately, my eyes was pinned to this. I want to see how they work, this particular CV, and how they take out the candle that anchors it. That was all that was in my mind. This particular CV and how they take it out. If you look at the high of this candle, that's 2735.06. I'm checking it to the that's 2735.08. So they took it out. And then they took it out. I was anchored to, okay, now I'm getting this particular 3 down close candle. That's my other block. That's my other block. So one trade came inside here. Rule of other block, displacement. This is my displacement. Took this out. Or the retracement back. This retracement also conformed with 50% rule, 50% rule, equilibrium rule. They all retrace back into equilibrium. So other block, put a trade here, stop loss here for this, this. So 2733.50 obviously, so since because of the spread it filled a bit higher. So that was the first. And then I saw this displacement out. Immediately I saw this displacement out, I became pinged again to place a trade, another trade within this particular 2 down close candles. This particular ones. This down close candle, then the displacement out. I placed another trade there. I just did stop loss here. And then I started watching it. I was thinking, okay, maybe if we do this again, but this wasn't convincing for me as a displacement. This is really, really weak for me. So if to say they have done something with a very good body, maybe a body that was there, I would have placed another trade here and then put stop loss here. So well, they didn't do that, and since they didn't do that, I didn't place any stop. I didn't place any other trade there. So I still kept my stop loss here waiting. So then they gravitated all the way and gravitated to take out this particular buy side. Immediately they took out that buy side, I was done. That was the previous design. I'm done. And that was the trade. 1, 2. This one, these 2. That was it. And I was done. So all of these, I didn't participate in all of these. I didn't join them. I didn't take the bulk of anything here. So since I didn't take the bulk of anything there, and I was done with Tuesday, Wednesday I just brought on my bag that, oh, I knew most likely they are going to take out this day. So I wasn't really bothered trading the gold on Wednesday. I just looked at it because market open, I knew most likely they are just going to run it. So immediately market open, they did that, and then I saw this fell off. After this falling off, I was now watching, okay, the CBA, the CBA. This particular series of down close candles, the other block that have failed, so it becomes a breakout. I was saying, okay, well, this breakout wants to send us down. No, it tried, but it failed. We didn't get up to this low, so and then we start gravitating back. So, gravitating back, this is another point I will be watching out for. The retrace there. That was the reason for the line here. I worked out for this particular fair value gap. You see that there's a small line being highlighted here. I drew that way before on Friday. So watching out for this particular fair value gap. With this velocity, I was thinking, okay, we're retracing. And then this would be like a target for me. This would be a target for me. I wasn't really expecting that they will run all the way to this. But it would have been a gaming if they have done it. But I was just holding out for this low hanging fruit, for this mini target. This is so close to getting it. This is a buy side liquidity for me. So with that being said, going to the 5 minutes again. Yeah, I knew the reason why I trade this. The retracement down into that favor gap, that big one on the 1 hour, and then good. I think I made it short on this. I'm not that sure. The retracement down into that favor gap, then the MSS. Yeah, I made it short on this. Sometimes I lose track of things like that. So this sending down, then this MSS, then the retracement, then the sending out. That was all it. That was the trade. So with that being said, here was the MSS market structure shift. Market structure shift. This particular point was my retracement level. Retracement to this. I waited and waited for this other block, but they didn't get it. But I was placing trades around here. I placed a trade around here. Yeah. For this, then the retracement into. There's a particular tiny favor gap here. You might actually miss it, but it's there. It's really, really tiny, but it's there. So that's another place to place a trade. If you look at the eye of this, the eye of this is of this particular candle is 2738.88, where the low of this is 2738.92. So there's a very tiny fair value gap here. It's really tiny. They entered it, they fulfilled it without invalidating it. So this was protected, and then they worked their way out. So and that was it. That was the trade. That was the round trade. So that's it on gold. That was all anticipated, and that's all of what I saw on gold for the week. And the Nasdaq was really dicey because I thought we were going to have a very strong week for the Nasdaq. And if you still remember these lines in our weekly outlook, I was thinking, okay, we are going to just keep gravitating upwards for the Nasdaq. But the Nasdaq just this took out like a whipsaw, took out the buy side and the sell side of the previous week. But I was long all throughout the Nasdaq. I was looking for just long, but I really didn't trade the Nasdaq. I was just using it for back testing. So on Monday longs, Tuesday longs, I used to take out this first on the long. Then Wednesday really showed me. I wasn't expecting this to happen. It did. And then Thursday, Friday. So going into it very well. Monday long, Tuesday longs. On Monday, this was the target. I was anticipating this particular low hanging fruit. Tuesday, they got it. Wednesday, I was now thinking, okay, by Wednesday, you should see them just running, but immediately they gave up the ghost. Then Thursday, I thought, okay, we should most likely walk this particular CB, but they just played. And Friday, they invalidated this particular CB, validated it and run all the way back up. So that's it. That's just my top premise on the Nasdaq. I just used it for back testing. I didn't take any single trade on the Nasdaq. So going to the pounds now. Pounds was actually really much of a given in the sense that after I realigned my bias, this became like a target. A target in the sense that I expected them to invalidate this BC. So coming down for the low of this BC. But with that being said, that was the line there. With that being said, I'll give it out. All this become what? Target. Previous daily low. Previous daily low. till they validated our VC. So immediately, if you are going to look at it, I just open it up. I didn't take any trade on the pounds. Actually, throughout the week, I was only mainly focused on the euro. So on Monday, well, I did back testing on the pounds to just watch out things. That's why you can still see some of my annotations there. On Monday, after I did back testing, after I saw what Monday did, I went to the back testing and saw, oh, this would have been a powerful point. Just enter this fair value gap that they retrace into and then favorably ghost on Monday. Then they didn't complete the objective. Yeah, that's one thing I'm trying to draw your eyes into. I've said I'll mention it. It didn't complete this particular objective on Monday. So on Tuesday, that was the target. This equals that became a target. I was so thin to see it. I didn't trade it, but I was so thin. And then they started going back up. This CB, this particular CB would have been watched out for. This particular one, I'd have been watching out for it. That particular CB, and then going by the 5 minutes, let's see if we can actually see a trade. Yeah, obviously it's there. So going to the 5 minutes now. Sorry, I'm just using one screen. I should have really divided this so it would have been easier. Going to the 5 minutes, they enter the CB, and then this displacement first. You might still be thinking, I don't want to take it. You might not have the courage of taking it. I might not want to take it here too. But this particular one was a given. Breaker, CB, objective. And even if you didn't take it here and they have seen that, oh, they have fulfilled the breaker objective, then drawing it out. This is the breaker inside the CB. Let me adjust it very well. Breaker inside the CB, the retracer all there. Went down. If you didn't take your trade there, another opportunity is still around. Another opportunity is still around in the center. Looking at this pathway, they retraced more sell-offs. So a retracement, then what do you expect? Another sell-off. Where would you have taken the sell trade? Inside this fair value gap again. Taking it inside this fair value gap and then waiting for all this would have made sense. And that would have been £4.